begin to see things in a 5-minute chart that aren't actually there because you're so close to the market. And also, because you're on the hard right edge, you have to be able to step away from it. So my advice for beginners is to start with much larger time frames, daily charts, weekly charts. I don't think monthly charts is practical, but nothing lower than a 4-hour chart, because it gives you time. And also, it's amazing when you're trading 5-minute charts. You sit there for hours on end waiting for a setup or whatever, and then when it happens, you feel rushed. All of a sudden, it's just the elastic band is hit. So I think it's very practical and good for new traders to be able to move away from the market, make a decision, make a trade, and then step back without any pressure of time. And also, they must allow the market to tell them what's happening, because nothing will beat your eyes. There's no indicator. I mean, the market, if you're going to be in the technical side of the market and not the fundamental side, is price driven. So the price will determine and tell you everything you need to know about the market. The indicators follow, or whatever system you do will follow that. So it's all supply and demand. So you have to keep it as simple as possible, particularly when you start.
I love hearing these common themes. It really echoes a lot of what Stuart talks about, those core themes that you have. Keeping it simple, the time frame.
Yeah, one thing that stood out, what Mark just said, was the time, and the time you have to react to things. And when we're not very experienced and we're not so sure and certain and confident of what we're doing, it does take time for us to convince ourselves, right, this is what we need to be doing next. And when a market moves so quickly like that, you just get eaten, beaten about the head. When you're trading things that don't move so quickly, time is not really an issue. It is over, if you wait 3 weeks to execute a trade, sure is, but you can wait half a day or a day or even 2 days and the damage is not significant.
Yeah.
So, I certainly agreed, and I like the way you talked about time and being able to step away.
And I think also in terms of price, if you think of price action for trading, it takes a while to become familiar to recognize a good setup. And today is do you know today's date? What is today's date?
20-something?
23rd or something of August.
Yeah.
And if you were looking at the Forex markets and you, for example, in July, towards the end of July, particularly in the majors, particularly in the Japanese yen, the Swiss franc, the euro and the pound, they were all setting up for an incredible trade. And if you look, I think it's somewhere, in the euro, for example, you had a beautiful double top on the weekly chart, and even on the daily chart, as it came down, the double top started to form around about 160.30, and as it came down to support around about 15300, and it broke support. All that you see in the currencies, when the dollar strengthens, everything else weakens, and when the dollar weakens, everything else strengthens. Now, for price trading or becoming familiar with charts, if you think of this table, or this is support. So now we have all the supply here, and it hits this double bottom, treble bottom, depending on what time period you're looking at, and it breaks through.
Yeah.
There's so many orders sitting here that the momentum for that particular big breakout that happened this month forces that market down. So now you have a situation where this is support. We had supply here. This is where everything was sitting. It broke through. Now, in any trade, if the market comes back up to support, what's going to happen? There's a supply here, so it's going to force it back down. So regardless if the market's rising or falling, that some supply and demand just repeats itself and repeats itself. So if there's enough supply there, you know that if there's a rally, it's going to force it back down. So before traders get involved with indicators or fancy systems or trading robots or expert advisors, they got to understand how the basics of the market works. Thank you.
Agreed. Terrific. Yeah, I totally agree with that.
I'm curious to know though, that almost sounds like an intuitive style of trading, in that you're getting a feeling for the market. A lot of people talk about how one of the big reasons a lot of people fail is because of their emotions, and that emotions getting involved with that intuition, and you give yourself that room to move. I'm curious to know your thoughts on where emotions play a part in trading? What are your thoughts on that?
I think, emotions, I wouldn't say that my style is intuitive at all. I mean, I try and remove intuition from it. Also, one of the and the only reason I'm talking about this particular setup, because it's very recent, is that for price action trading, you'll usually have some preconditions. It might be a particular formation, it might be so many bars, it might be a reversal bar or two reversal bars or candlesticks. But when everything aligns, and I can tell you a quick story if you like this.
Yeah,
So
please.
there's a man and he's fishing by the bank and it begins to rain. And another man walks along and he says, "I've heard there's a flood coming, so I suggest that you leave." And he thinks to himself, "No, I don't believe that. I'll carry on fishing." And then about an hour later, a boat comes along, and the man in the boat says, "There's a flood coming. You've got to leave." And the man continues fishing, and an hour later, a helicopter lands, and he says, "We've been told to evacuate you because there's a flood coming, and you've got to leave." And he doesn't believe him, and he continues fishing, and all of a sudden the flood comes, and he dies, and he goes to heaven. And he goes to God and he said, "God, I was fishing, why didn't you save me?" He said, "Why didn't you give me some warning?" And God says, "I sent you a man, I sent you a boat, and I sent you a helicopter to tell you." And trading's like that. If in a really good setup, there's more than one condition. And, it might be that in this particular instance of a recent trade, there was a trend line break, there was an indicator break, there was a perfect formation. There was 4 or 5 conditions that gave it a very high probability. And if you can find enough conditions that give you a high enough probability and repeat that often enough, it's not really intuitive. I mean, trading should actually be, I think to some degree, I don't know if you agree, Stuart, boring. It should actually get to the point where, it's a job. Because you know that, okay, I've seen that setup, and it's like a fingerprint almost. No two trades are the same, but they can be very similar. Or if you look at certain reversal bars, or if you look at certain particular formation in charts, you can see that every time this formation forms, it has an 80% probability of success if it forms in this particular way.
What are your thoughts?
Yeah, I've heard a lot of people describe trading as boring. It's very methodical. You're following a process, it's which has been developed over time. And I think a lot of people come to trading thinking of things like glamour and excitement and action and money and lifestyle, and they think of all these real emotionally driven things. But in essence, consistently profitable trading comes down to just following that methodology, following it with discipline and without hesitation and with certainty, and just going through this process of identifying patterns and executing a trade. And it's just, I've done this 3 times the last week. It's,
I think that's why a lot of people aren't successful when they come to the market, because they don't necessarily have that confidence in their plan. And then, that's what they're looking for, that excitement. And, once you've got a plan and it's in place and it's set and you are following it and it's just boring, you're following the system and you're checking it off. Some people, they get an itchy trigger finger and they're sitting there and they want to take a trade just because they're sitting watching the screen at the 5-minute chart, like you were talking about earlier.
Well, we've said many times how people, when they first start trading, they look for that complicated approach, whether it involve indicators or just ridiculous number of lines and different things on a chart. Simple works. We've said it all along, and but people don't want to believe that. They don't want to believe it's so difficult. So simple, I should say. They think trading's difficult, or they're finally convinced that trading's actually quite difficult. Well, therefore, I need to develop a complicated approach, because simple's not going to work. It's difficult.